It's a very, I don't know if auspicious is the right term, auspicious week, but there's a lot going on, of course. We have some of the news overnight. This week is a big week in terms of the August 1st deadline. It's not the first deadline we've had in this whole process since April. It might be the third, fourth, or fifth deadline at this point. But it does seem to be a deadline the White House wants to stick with. The global economy, markets have been on a real roller coaster ever since April 2nd, when those Liberation Day tariffs were first announced, and then paused about a week later. And then subsequently we had the trade war with China also put on pause. I don't want to go through a comprehensive list of everything that's happened in that time, because that would be our entire breakfast. But as Kuhn Tony mentioned, there have been some either deals, framework agreements, rough estimates of where some countries will land in this new world of U.S. tariffs. So I just want to mention a couple. Kuhn Tony mentioned some as well, but Japan, 15%, Vietnam, 20%. Malaysia was put at 25%. They're still working on that. 19% for Indonesia and the Philippines. And of course, we're kind of waiting to see what happens now that it appears perhaps Thailand and Cambodia are trying to negotiate down the tariffs they received. Deborah, let me start with you. How is this working out so far for Southeast Asia?
Well, it's a real challenge. And in particular, I would say we have had, as you mentioned, a lot of adjustments along the way. But August 1st at 12:01, the current pause on tariffs above 10% expires. So something legally does have to happen in the U.S., because otherwise we will snap to, well, then it's unclear, actually. You have to go back through multiple executive orders to figure out what the tariffs will be, but they will go to something higher than 10. So we have to have something before 12:02. On August 1st. So first of all, headline, something's happening. Regardless of all of these agreements, lack of agreements, I've been calling them napkin deals because I think they are about as durable as a paper napkin, and they are about as well specified as you could write on a paper napkin. So that's where we're at. We're at napkin deals, in which these tariff rates are very high. You know, even the napkin deal tariffs at 15% is actually significantly higher than we had in March. In March, tariffs into the U.S. were roughly 2 to 3% on average. 15% is high for a lot of companies, and particularly for small businesses that are trying to navigate with fairly thin margins. So these tariffs are high, 15, 20, up to 50 if you're Brazil. Assessed for various unclear reasons. The original April 2 deadline tariffs had a nonsense formula attached to how we arrived at these numbers, but at least there was a formula. What we have now, from what Trump has said in letters and in these napkin deals, completely unclear. So I think one of the challenges for counterparties is, like, what is it that we have to do in order for us to lower our tariffs? How naked do we have to be in order to get a reduction in tariff rates? You know, it's unclear. And for Southeast Asia, just to come around, and I apologize for the length, Southeast Asia in the very beginning ended up with high tariffs. And it ended up with high tariffs because of this nonsense formula, which said take your exports to the United States, divide them by your imports from the United States, cut that number in half, and bada bing, there's your number. That resulted in high tariffs for this region, which is very export dependent, of course. And those numbers have become sort of an anchor for all of the discussions after that. And that is resulting in real challenges for this region and uneven tariff numbers, which will create challenges for supply chains. We're sitting in Singapore currently at 10%, but that 10% could bump to 15 in 2 days. So what will that look like? We have a growing number of sector-specific tariffs, which are a real problem for companies. So the net result is that we have had the last 6 months of tariff news is going to continue to be volatile and confusing, especially for Southeast Asia.
Well, you mentioned the kind of the unpredictability and the paper napkins because they can be torn up. I mean, President Trump has said that his goal is to reduce trade deficits with America and bring manufacturing in. But we have seen him use the tool of tariffs for all kinds of non-trade related issues, right? You mentioned Brazil. Brazil was given, I think, a 50% tariff for prosecuting a former president who was an ally of President Trump. We saw in the very beginning of this, Colombia hit with a 25% tariff for refusing to take deportation flights from the United States. The president has said that his threat of tariffs brought an end or a truce in the conflict between India and Pakistan, something India quickly rejected. And he's also used that as a tool, he says, to bring a bit of a truce to Thailand and Cambodia in their border conflict. Mary, you were 6 years Minister of Trade of Canada. I think we could probably have a whole breakout session on Canada's experience with Trump and Trump 1, Trump 2. I suspect perhaps you were minister until middle of March.
Yes.
Perhaps the January to March period either felt on its own like 10 years or 10 minutes.
Yeah.
I'm not sure, but tell us a little bit about your experience and what perhaps lessons you have or Canada has for leaders in Asean who are trying to navigate these waters.
Well, thanks so much, Bill. I mean, I agree with Deborah and the uncertainty that is just engulfing all of us. I mean, Canada, despite being the United States' biggest customer, people who are here who do business will often say you treat your customers really well, especially your biggest ones. I mean, to give you an order of magnitude, I mean, Canada sells more to the United States, or rather, we buy more from the United States than Japan, than China, and the United Kingdom combined. Like, that's the order of magnitude. We do trade, two-way trade, of over $1 trillion a year. Yet, and we have an agreement. We have an agreement negotiated by President Trump during Trump 1 that was touted to be the best agreement in the world. And despite all of that, we are not immune to tariffs. What the Canadian experience so far has been, we are facing, March the 4th, 25%. Canada responded with retaliatory tariffs to about $90 billion worth of goods immediately. But since that time, 25% in the recent letter could go to 30%. We are going to be subject to the 50% for steel and aluminum, which Canada is a big net exporter of both of those commodities, as well as copper. So we are in the, so my message there is that we're in the same boat as everybody else, despite the fact that we are a trusted, reliable trading partner and have been for decades upon decades. I like the term that Deborah used around paper napkin deals, because I think the reflection for Canada is this: we negotiate an agreement. We have that has actually seen trade volumes increase to the benefit of Canada, United States, and Mexico, and yet here we are. So what does it say to you? It says to you that how can you take, how much do you take to the bank, if you will, your trade agreement? Now, I suppose the silver lining in this latest round is that those exports which are deemed to be compliant to the USMCA, to the agreement, do actually are experiencing tariff-free. That's really good, and that's about 40% of Canada's exports to the U.S. That is positive, but as I said, those sector tariffs are going to be very, very punishing for Canada, and I know that the Prime Minister of Canada, our new Prime Minister and Prime Minister Carney, as well as my former colleagues in the Trade Minister and the team in Canada, are at the negotiating table, and we're going to need to do what is good for Canada to ensure that we have, that we continue to preserve this access to this important trading partner in this and the United States. But at the same time, Canada has made a decision to reduce its reliance on the United States. I don't think that you can conclude anything but that. We saw that in Trump 1, and now certainly that is where Canadian the Canadian government and certainly Canadian businesses are left to, to think about how they're going to chart their future. To give you kind of just an order of magnitude about not only the trade volume, but our exports went from 80% at Trump 1 directly to the United States. And with the goal of diversification over the last number of years, now it's 75%. But that is still a very, very significant dependence to the United States. So we're going to do a number of things. We're going to reduce that dependency on the United States. We're going to create the conditions in Canada to build a stronger Canada by removing interprovincial trade barriers so we can be more domestically competitive. We're going to build big projects in Canada. So if you think about rails in Canada, uses a lot of steel. Well, we can use a lot of that Canadian steel in Canada in the domestic market. But I think the most important thing that we are going to do as a country, and it matters here in Southeast Asia, is that Canada is going to diversify and double down on that diversification. We already are part of the CPTPP, which is terrific. We're at the table negotiating with ASEAN countries. One of the last agreements I concluded was a bilateral agreement with Indonesia. That's really important because that is building the foundation for Canada to come into markets and to find those reliable partners that where we actually respect the rules, want to work with partners who respect the rules, and actually start rewiring some of those supply chains. It's going to take time and it's going to be hard work, but I would sort of say that, that from a Canadian who doesn't want to be a 51st state, diversification and finding partners, reliable partners, is where Canada is going to go.
I want to come back to that idea, perhaps in a few minutes, about the degree to which diversification is possible, particularly in this region. But also, I just want to ask you one more question. I mean, you were in the proverbial room where it happened, particularly in Trump 2, and I'm curious how the talks and the whole relationship unfolded in public with Trump's his announcements, his tweets, Truth Social posts, versus what you dealt with American negotiators behind the scenes. And I guess the relevance is, countries here in the region are getting these letters that announces things, even while they're amid talks. Vietnam has still never confirmed that they reached a deal for 20% tariffs, presumably because they think they can still negotiate down from that. To what degree did the U.S. president's public statements, put the negotiating teams in a corner behind closed doors?
Well, I mean, we were quite used to, from the first, sort of from Trump 1, reading the tweets. But the approach we took in Canada was that as the tweets came out as one form of communication, what was written in the executive order is what you look at, right? I mean, so there were often lags. I mean, sort of days of lags where there would be an announcement that would come out, and we would then, the teams would then do a range of confirmations to really understand what is it. And then you wait for the paper, and then you go through the paper, and the paper is what you're going to act on or respond to. So that was the norm, and I suspect that is still the case today.
Okay, Deborah, from basically from India east all the way across Southeast Asia, these are the factories of the world. We had an interview, Bloomberg had an interview, I think 2 weeks ago, with 100-year-old former Prime Minister of Malaysia, Mahathir Mohamad, and he was asked about the Trump impact on trade, and he said, I want to quote him here, he said, "It's going to damage America more than the rest of the world." Do you think that's true, given how important the U.S. is to the factories, to the economies in this region?
I think it's very damaging for the U.S. I think Trump assumes that parties will do whatever it takes to continue to have access to the U.S. market. And while the U.S. market certainly very large, very lucrative, crucially the lucrative part, and has been a traditional powerhouse, sort of think about flying a plane, it's a major engine of that forward growth for the globe. But if that engine is shut down, which is where I think we're basically at, you have to figure out how to fly the plane on one engine. And I think there's, 83% of the global economy is outside of the United States right now. Increasingly here in Asia, the biggest trading partner is not the U.S. The biggest trading partner for everyone in the region is actually China. And so you have to say, how do you manage to fly that plane on one engine? That's important for export-dependent countries in an increasingly protectionist world to figure out how do we pivot. And I think that pivot is happening both by governments but also by companies, right? So the way that we have supply chains, of course, they're not government driven. They're every company making thousands and millions of decisions every day. Increasingly, those companies, which are not stupid, they're going to say, well, do we want to continue to sell to the United States? If we do, then we just have to recognize that the uncertainty is going to continue and the costs are going to increase. Doesn't mean that you stop trading with the United States. It just means you need to be very careful about what you're doing. And if you're going to pivot, it's very easy to sort of sit on stage and say, well, you should just pivot and find another market. But that's also challenging, right? It's costly. It's challenging. The markets may not be as lucrative. They may not buy the same things. In this case, remember, we're only talking about trade and goods. We're not talking about trade and services, investment, all the other stuff that's important. We're only talking trade and goods because that's all that, for whatever reason, President Trump pays attention to. So trade and goods, pivot. Great. To where? To do what? I mean, so I think we're in this interesting transition now between the world that we had in December and the world that we are now entering, which is not the same world that it was. Now, it doesn't mean trade ends. We're still flying the airplane, but it does mean that it's going to be quite different. And that process of getting from where we've been to where we're going to be is going to be long and disruptive. And I think, especially for businesses, you have to recognize that this is not a sort of simple problem that you're facing. This is a pretty fundamental shift that we haven't really, in our lifetimes, lived through, this extent of change. And that's why it's so unsettling. That's why you end up with ballrooms full of people early in the morning who want to talk about tariffs, because it's completely different from what we thought we were going to be talking about in December. And it's going to continue to be top of mind for businesses for sure and for governments for quite a long time to come.
Mary, you mentioned the experience with Canada from Trump 1 to Trump 2, going from, I think you said 80% dependence on the U.S. trade to 75. I'm sure the target is continuing a downward slope. But what are the options? What are we seeing already? And what are the options for, particularly for Southeast Asia? To what degree is China even an option there? And perhaps to what degree do the countries in the region even want China to be an option? Where is the EU in all this? Where is the trade within the region? I guess the broader question, how much cushion is there if the U.S. becomes a more closed market?
So I agree that that we are going to be in for a period of uncertainty for some time, and I think that is probably the most damaging thing, because businesses will say to me all the time that it may be bad news, but if you understand what the bad news is, then you're pricing it in and you're planning for it, and you actually make plans and contingencies and variables based on that. The Canadian approach, and I think that we've got a great foundation. And what do I mean by that? I mean, I've never had a mandate letter from the Prime Minister that did not include diversification. So moving from 80% to 75 was very intentional. And I'll tell you what the goal was, because when I tell it to you, it actually sounds fantastic. Increase your non-U.S. exports by 50% in Canada. This was in 2018, by 50% by 2025. We've hit that target. But when I say increase your non-U.S. exports by 50%, it sounds fantastic. But when you think about how much Canada did with the United States and sort of that target, which is actually overall not that ambitious, but achievable, we've actually achieved that. But so for Canada, we were very conscious that while our biggest trading partner, and one that we did a lot of volume with, that in and of itself was not going to give us the resiliency that we were going to need. And I think today, given the context of what's happened in the last number of months, that acknowledgement, there is no doubt about that anymore. If there was during Trump 1, after we were able to renegotiate an agreement, and then we had some stability over a number of years, I think Canadians thought, well, geez, we might have been out of this, right? But what do I mean about creating sort of the right conditions for us to diversify? Well, Canada today has access to 65% of the world's economy through free trade agreements. You look at the CPTPP, that's 100 million customers. You look at our agreement with the European Union, that's another 100 million customers. You think about what we're doing here in the Asean, which is going to be the 7th largest economy in the world. It's the fastest growing region. So we have been doubling down to make sure that we have these trade architectures around the world. But more importantly than the trade agreements, it's helping our Canadian businesses get into these markets, because it's really easy to do business south of the border. And Canadian businesses sort of say, well, they would say to me, why would I need to do this? It's lucrative, it works, we've got these integrated supply chains, let's make North America strong. That is just not the case today, and Canada invested in $2 billion over 5 years for a robust Indo-Pacific strategy to actually build the architecture, trade missions into this region. Export Development Canada, offices in every single market here in the ASEAN, with the exception of Myanmar. The Canadian Commercial Corporation that is facilitating contracts, government-to-government type contracts. So creating sort of the platforms for our businesses and our investors, both ways, by the way. One of the last things I did as the Trade Minister here in Singapore was to create a gateway for nuclear energy into the region for the Indo-Pacific, because as this region grows, the mix of energy is going to be something that you're going to be looking at, and nuclear energy could be one of those solutions in addition to the range of solutions. Those are the kinds of things that we've had to intentionally think about, invest in, make policies in Canada with a longer term view that this is where we need to be, one part of the world. And then the final point is on CPTPP, Canada was the chair last year, and guess what? We're having conversations with the European Union. The United Kingdom joined and acceded to the CPTPP. So you are starting to see structures by government responded to by businesses that is responding to an architecture that I think the global trading system is yearning for, and yearning for the kind of new partnerships that I think they didn't think about before, and they have no choice but to think about today.
I guess on that point, Deborah, if you are the head of Thailand's Chamber of Commerce, or if you're a factory owner in Jakarta, is there any low-hanging fruit out there for you to focus on in the immediate short term? Do you turn to the EU? Do you turn to China? Do you turn to India? What is the, I don't know if it's the best option, but if there is low-hanging fruit, where might it be?
Well, I think this is a region that is particularly well suited for a transition. And, one of the reasons why I'm still here in Singapore after 20 years is that this is a part of the world that believes in trade. And it is a part of the world that has a lot of different trade arrangements and trade agreements in place. Many of them negotiated over decades. Many of them have real concrete benefits. For example, zero tariffs within ASEAN, zero tariffs with most of ASEAN's major partners, zero tariffs in the CPTPP, lower tariffs in the Regional Comprehensive Economic Partnership across Asia, increasingly agreements with the European Union that also drop tariffs. And in addition, of course, it's not all about trade and goods. The services, the investment, the intellectual property rights, the e-commerce, the digital chapters, all of that is going to be a set of platforms or opportunities that Asia has that other regions don't have. And so, as rough as it might feel for businesses in Southeast Asia, at least you have those opportunities, which I think we haven't exploited fully at the corporate level. So we have a lot of ways in which you could do trade differently, but a lot of businesses sort of get, complacent, and they say, well, why would I use a different agreement when this one works for me? I'm going to just keep doing that. Now you have to look a little harder. The good news is that you have this network of arrangements. Compare that to someone, say, in South Asia, like a Bangladesh, where they're really in trouble, right? They're facing a very large tariff out of the United States. It's their major market. They don't have regional systems in place within South Asia like ASEAN does. So where do they go? And that's why they're especially keen to build up their capacity to be part of something like an RCEP, so that they become also in this new network of arrangements. And so, again, I would say for firms, what can you do? if you aren't looking at these alternative trade arrangements, this is the moment in which to dust them off, pay attention, and say, here's what we're currently doing. What agreements should we be using? Don't always trust your supply chain and procurement people, because they will tell you, of course we use them. But when you actually dig into it, I find often that we don't use them because we just don't understand it or whatever. There's always good reasons why we don't, but we actually don't use them. So pay attention and then figure out what are the alternatives. Where else can we go? What other ways do we have to do business? And then if I can just finish with sort of a caution, though. One challenge that we will definitely face in Southeast Asia and in Asia more broadly is, remember, everybody is now pivoting, and everybody is pivoting simultaneously. And the challenge that we will face, I suspect, is that we're going to have a lot more competition within Asia than we have ever seen before. Now, that may be less of an issue in some markets, but it will be a real challenge for others, where up until now they've had competition. It's not like they're, excluded from the world, but the competition locally has been modest because they've been seen as too complicated, too expensive, too difficult to really penetrate. But if you can't sell to the U.S. and you're looking for a pivot, you're going to start looking at places that had been viewed as not the most desirable location to invest suddenly becomes desirable, which means we're going to have competitive pressures domestically, and that will be new for a lot of places, especially across Southeast Asia. So there's great news, and then there's a sort of caution at the end of that, which is the pivot is going to be disruptive domestically too.
I'm aware this is a Sustainable Business Summit, and the subject of our discussion here is Trump's tariffs and ESG. I don't want to neglect the second half of that issue. I want to raise the issue of we have seen, for instance, Chinese solar panel manufacturers looking across Southeast Asia to find places to set up their production facilities, to work with companies to try to get around some of the Trump tariffs and previously the Biden tariffs, actually, that are in effect. More broadly, what do these relationships, what does this, I guess, new world order mean for ESG investing? And either one of you who are...
Sure. All of the companies that I've talked to, sort of large multinationals, to the small, innovative companies that have solutions, whether it is, AI and digital solutions that actually are an underpinning for, for a clean tech company, let's say. They are continuing to have their eyes on the ball around net zero commitments, right? Because governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there is, while there isn't the intense activity around, around accelerating ESG, I don't think it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a how do we do it in this current environment. I think about it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? A net zero world. I don't think that that's going to change. I do think that there are adjustments to this, but all the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? The carbon border adjustment. Different governments have put forward commitments to getting to net zero. I think that if you, and I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? So if that signal is still there, that is actually, I think, one area of predictability for businesses and investors that is still directionally where we're going. right? It might, we have this great saying I used to sort of say to people, look, if you're in Canada and I need to get to the west coast of Vancouver, it's great. I can kind of go down to Montana, which is the U.S. I can go up to to Yellowknife in the Arctic. But as long as I'm going west to Vancouver, that's terrific. And I'm not on the highway to the Atlantic Ocean, we're going the right, we're going in that direction. And I that's my observation, and I think from governments and from businesses, and I can't imagine that people are going to think that we're not going to work and tackle climate.
Deborah, the trade, this whole world we're living in right now of unpredictability on tariffs has been described as tossing sand in the gears of a system that had been functioning much more efficiently. Do you agree as well that ESG is still a reliable bet on the future, particularly for countries in this region?
I think it's important. I think the challenge for companies in particular is if this is not a time when it feels comfortable to invest in some kinds of longer term decision making, because you're in a bit of a panic mode. Depends on the company, obviously, but many companies are in a bit of a panic mode, and in a panic mode may not be the time to say, well, where would we want to be in 30 years, right? I need to make my quarterly targets, and I'm really in trouble. So I think we will continue to move in the general direction of net zero, changing energy, et cetera, because you have to. But the process is not going to be as smooth or as easy or as fast as people might have imagined, just because of the amount of turbulence that we're in right now and the cost associated from pivoting on trade, but also pivoting for climate reasons. And so I think we will continue in the general direction, but it is not going to be as smooth a process as we might have imagined in December. That's literally how much things have changed in a very short amount of time. My analogy that I give for where we're at on trade is that, we've spent 80 years basically building this vase, if you will, right? And we've spent 80 years decorating it and adding stuff to it and whatever. And that global trading system, it wasn't working beautifully, just to be clear. And it was getting pushed closer and closer to the edge of the table. But April 2nd in particular, our Liberation Day, is when it got thrown onto the floor and it smashed. And so we've had 80 years of trade integration, rules, procedures, policies. Now what? Doesn't mean we won't trade, but we have to figure out how do we pick up those pieces and how do we build something better. In the building something better, I hope that ESG becomes part of that. And we say, if we're going to rebuild from the shards of pottery on the ground, let's build something fit for purpose. Let's build something for 2026 and beyond that deals with climate, that deals with digital, that deals more with an integrated approach that gives you economic development and growth more broadly. Let's build a better system. But that process is not going to be easy.
I think you've found a way to really see the opportunity in the current paradigm, I guess. And we'll see. We have perhaps about 48 hours to see if the pottery gets swept off the table and back onto the floor once more. We didn't get a chance to talk very much about perhaps the lack of bigger market reaction to all this, but I'm cognizant of the time. I want to give our folks here in the audience who may have questions a chance to speak with you directly. So if you do have questions, I don't know if there's a microphone, Katie, but if you have a question, please let us know. We have a couple microphones in the back there. I can't quite see over there. And if not, I do want to mention something on the market side. We have seen, I guess, in the stock markets, we have seen kind of an increase every time some of these deals are announced, which is surprising given that the average U.S. tariff 6-7 months ago was 2%, and now we seem to be celebrating 15, 20, 25%. But the dollar has gotten much weaker. When do we start to see some of that? The impact of all this filtering through? Or are we seeing it and it's more piecemeal right now?
Well, I think you'll see some of it this weekend because the market seems pretty relaxed that this deadline on August 1st will just go away somehow, be pushed, that Trump will chicken out and revoke this this effort, which is certainly possible. I mean, we've seen that, right? So it could be that we push the whole deadline. But I'm not convinced we're going to push the whole deadline. So we'll have to see where we're at in 48 hours. But if it isn't tacoed, if it isn't pulled back and postponed, I think there's going to be some unpleasant market reaction that takes place. And then how long that lasts, I don't know. But that level of disruption and volatility, it will start to show up in markets, but also the inflation costs and the higher costs in general will go to the U.S. market, because remember, it's U.S. consumers and U.S. businesses who are paying for all of these tariffs. So you cannot increase prices from 2% to 15% or higher without any consequences domestically within the U.S. That's not possible. We've seen a delay because a lot of firms, right now it's currently 10%. A lot of firms stockpiled. 10% is sort of manageable, but when you're at 15, 20, 50, that's not so manageable. And so I think we will start to see real consequences in the U.S. economy, including a broader slowdown in the U.S. economy. Everything's going to be much more expensive, more challenging. That will have consequences. Again, we just sort of turned off the engine on the airplane. There are consequences to doing that. You can't just fly forever as if the plane is still functioning as it was. It's just been a bit of a delay. And again, if you think about the airplane analogy, engine turns off, plane can still fly, plane can still land, but what the plane can't do is go on the same route that it might have originally planned. It will need to come down probably sooner. It will need to think differently about how it's configured, et cetera. So we have turned off the engine, plane is still flying, but at a certain point, the plane has to have a different plan because it can't fly forever as it intended when it had functioning engines.
And Mary, 75% is still substantial. We will get today, by the way, I think in the U.S. day, we get second quarter GDP numbers coming out. So perhaps there will start to be some indication of what's happening. But 75% is significant. What is this? What does this mean for Canada's economy, despite all the efforts to diversify the trade flows?
Well, I think it's going to be a challenge for a period of time. But I also think that the government has already very proactively taken an approach that is going to build sort of a stronger Canadian economy through building major projects, dealing with sort of major infrastructure, whether it's rails and ports and digital infrastructure that will require significant investments, but actually also create significant opportunities. But I just want to kind of touch that point that you asked a little earlier. I mean, there will be a reaction, and it's only a matter of time. I mean, remember, tariffs are taxes on Americans. They're the ones that are going to have to pay. And at some point, and we certainly saw this during Trump 1. I mean, when those tariffs start hitting, and those companies start having to lay off staff, those companies it starts affecting those bottom line. The response happens in the United States, and the question is, there's a runway to the next midterm, and how will Americans respond in the midterms as this, in addition to what the markets will respond, how are Americans going to respond? And I think that back to your point earlier about, how do you treat the agreements, and can you take them to the bank? That's another element of can you take it to the bank, because Americans are going to respond, and I think when Americans respond, this administration and this president is going to respond.
Well, we're only 6 months in, so we still have 3.5 interesting years ahead of us.
Well, midterms are in a year, so
maybe.
Yeah.
See if he leaves on time.
Well, I want to thank you. I want to thank you both for your perspectives. If there's no further questions.